Good morning, everyone. Welcome to our new season of Compass Coffee Talk. We're really thrilled that we've got this far with it. This is our 31st episode. Come on in. Really welcoming everybody. Bill Capsalis, good morning to you, my co-host. And we're really thrilled with our guest today. Gentlemen I've known, we were just talking about it for 26 years, but before that, Steve certainly has had an incredibly stellar career in the food and CPG industry. Mr. Steve Hughes. Steve, thank you very much for joining us today.
Well, thank you for having me, Steve. Bill, I look forward to it.
We'll get rolling in a minute here.
All right. And we got folks coming in. I want to say Happy New Year to everybody. It's certainly been a challenging few years. Continues to be a rocky road out there, but I think we're seeing some bright spots. I know that it's kicked off to a very busy season. We're excited. Boy, what are we, 5-6 weeks away from Natural Products Expo West, the gathering of the natural products industry. So things are off with a bang from this end. We hope the best for you, a happy, healthy, and productive new year. I want to also thank our sponsors to Compass Coffee Talk. That's Presence Marketing. Thank you very much, Milton Zimmerman, Bill Weiland, Christine Zumas, and all the folks over there at Presence. Naturally Boulder, Naturally New York, Naturally San Diego, all sponsors. Thank you very much. If you're not part of the Naturally Network, they're in major cities throughout the country, and it is an incredible resource for entrepreneurs and brands in the natural products industry. So make sure you check in with Naturally Boulder, Naturally New York, Naturally San Diego, the Naturally Network. Steve and I, again, first met in the late 90s when I was publishing a Natural Business and Lojas Journal. And that's when we first met. You were the incoming CEO of Celestial Seasonings.
Yeah, in 1997.
At that time.
Yeah, 1997.
Yeah, and since then, you've certainly made a mark on the Boulder natural products community and, of course, the national marketplace for natural products. Steve led Celestial Seasonings for a number of years, and then one of my favorite brands, Frontier Natural Products. And after that, he actually built Boulder Brands, which comprised a number of prominent brands in the natural products industry, Evil Foods, Udi's, Earth Balance, and others. I know I'm not getting them all. And then after that, you founded one of the leading investment firms in the natural channel, Sunrise Strategic Partners, of which you're a founder. So you really have kept your eye on how to build brands, how to consolidate and scale, and the marketplace where investment, what's happening in economics right now. And I know you've mentioned we're a bit in uncharted territory. So how's it going as we enter 2023? And I know Bill will have some questions for you, and we'll also be taking questions from the audience. So thank you for joining us, and just post your questions in the Q&A, folks. And again, welcome to Compass Coffee Talk.
Yeah, Steve, it's been an incredible 25 years. I mean, I got to Boulder just as the natural products industry was kind of coming out of coming to life, I guess. And it was really the first generation founders, Steve Demos, Mo Siegel, Mark Retzloff. And to watch what's happened over the last 25 years is just fascinating. I mean, it's been exciting to be part of it. I've worked on a lot of great brands with a lot of great people. I've had a chance to be on the front end of this industry, becoming kind of a launching pad of brands for the next generation. And it was for 25 years, there was nothing but capital. I mean, increasingly almost every year, if you had a good idea, you could probably get some funding to get started. And what happened last spring was kind of the pendulum swung back the entire other way. It went from being, people were prepared to invest in companies that, maybe had a great idea, but not a great business model. And what happened was you had a couple things happen. You had the Fed started making money more expensive, but then you also had a lineup of natural brands that went public. Beyond Meat, Oatly, Tattooed Chef. And they came out of the box, trading well above their IPO price. But they were businesses that had great top line, but didn't have very good business models. And they were losing money. And they're now trading like 95%, 90% below their IPO price. And that has really cooled off, investors, looking to take the big swing at high growth, not great business model kind of companies. So I think it's kind of a little bit of retrenchment right now, which I think is going to be with us for a while, because interest rates are going to not going down anytime soon. They're probably going up. But I think this, when you look at the lineup of companies went public in 2020 and 2021 and how they performed in the public space, it's given investors a real pause about, okay, what are the rules? What has to happen for a company to be successful today? And I think it's a bit different than it was 2 or 3 years ago.
Agree. Steve, we've talked about this a little bit, you and I, one-on-one, but when you look at smaller brands and you look at their options in front of them today for funding their businesses, you've worked with some emerging brands like Kodiak Cakes. You want to talk a little bit about that journey, that entrepreneurial journey towards like, hey, we have a good idea, we just need some help. What does that look like today, or what did it used to look like, and how is it different today?
Well, I think how it looked before was, capital was going to be pretty patient. They'd invest in a company, and if they're losing money but the business was growing, they keep funding the business. And again, I think that has changed pretty dramatically, pretty quickly. The real message I think now is that you have to have a great idea and you have to have a great business model. And at Boulder Brand, at Sunrise, one of the reasons we brought Peter Burns and his team in, they had such extraordinary success at One Bar and Justin's, and so they know how to drive top line, but they also know how to get the business model tight so you're making money. So when they went to exit those businesses, they had all the big strategics were at the table, and that's how they end up with a great outcome. So, on the one hand, if you're a company that's got some scale and making money, I would just be really prudent now and kind of be patient and grow and protect your bottom line. If you're a smaller company that isn't cash flow positive, you've got to get the cash flow positive, and you're not going to get funded, or if you get funded, you're not going to like the terms of that funding. And I think that what we did with Teton and SunFed is a good example. These are two pretty good sized companies. They're both $60 million. They had just turned profitable, but we figured if we put the two of them together and create this grass-fed foods, we'd end up with a $120 million business growing 30+%, making good money. And that also enabled us to bring in a been there, done that executive like Jeff Trippican, who's done, Tripp has done it like 2 other times with Coleman and Nyman. Yeah. So that's one model. The other model is, I think this could be safety in numbers. So if you're a smaller company that's underfunded, it's losing money and can't get funding, think about other brands in your category that are complementary, that are facing the exact same issue. And could they or should they be, trying to merge? I think that's going to be the theme over the next 18 months, is going to be we call it the mini merger, where you get 2 or 3 small companies in the same category who together are profitable.
That's really interesting. I've seen this roll-up model before, like I've seen people try to do that before, and I think that's an interesting prediction on your part. Yeah, I'm just really curious, can you say a little bit more about grass-fed, because I know it's got a regen ag approach to it. Can you talk a little bit more about that? Because I know our audience is curious about regen.
Yeah, at Sunrise, we really felt 6 years ago that regen agriculture is going to be perhaps the biggest fundamental mega trend of the next 20 years, because basically it's back to the future. It's how we did it 100 years ago, before we industrialized our meat supply and industrialized our dairy industry. So we invested in Vital Farms, Maple Hill, and Teton, and put probably 40% of our capital into this space. And it's proven to be, luck beats skill sometimes. Our hunch was right. This trend is scaled. We invested in Teton when it was a $3 million business. And today, it's part of a $120 million platform, which is the largest grass-fed beef platform in the space. And I think is going to ramp and grow very quickly, because one of the challenges for these trends is for the companies to get the scale, so the retailers and food service operators can really have confidence they can lean into it and be able to get supply, get the product supplied properly and professionally. And so, when we think about regen agriculture, I mean, take Maple Hill. It's better for the earth. I mean, they rotate the animals, the cows, around the milk shed every 3 days, so the grass looks like you haven't cut a gust in 3 years. It's the weight, the manure, it's how it used to be. And so then, for the animal, these cows are productive till they're 14 years old. Where an organic cow might be productive till they're 4. The calf never gets an ounce of organic milk of the mother's milk on an organic farm. They're on formula. We incentivize our farmers to wean, have the calves on the mom for 8 months, and then it's better for you because the chemistry of milk's different. I mean, you get when cows are wired to eat grass, right? They have 4 stomachs for that reason. That milk is a different chemistry than if you feed them grain, right? So there's just so many great positives here, and I think as the consumer learns it, and we launched Maple Hill milk into Whole Foods, and our best item at Boulder Brand sold $85 a week per store at Whole Foods. Earth Balance margarine, that half gallon of whole milk for Maple Hill sells $600 a week. Little Farm sells $1,200 a week on their top 2 items. So the consumer gets it. It's just making sure the product, a challenge for us is to get the products there in an economical way that they can afford them.
Yeah. So we do have a question in the chat I want to get to in a second here. And it's kind of an interesting segue, Steve. So we go from talking about brands and commodity brands, which you just mentioned 3 of, right? And to the entrepreneurial journey. And Laverne Weber wrote in the chat, what are the basic 3 to 5 general components of a great business model? Now, when I think about that question, I also think about, okay, you're dealing with entrepreneurs, you're still dealing with people, right? You talk about brands, they've got, their own nomenclature, but there's entrepreneurs involved in a lot of these companies. What are those sort of 3 to 5 key components you think that make a real ideal business model for a brand?
I mean, the first ideal is, a highly differentiated, meaningful point of difference.
Okay.
Ideally attaching an untapped consumer need. So something that, the consumer is ready for, like Maple Hill milk, right? But isn't on the market yet. So the big idea, and one ideally that's got some insulation to it. The second thing is, margin. If you are, if you're a 50% gross margin business, your ability to get the cash flow break even quick is there. If you're a 20% gross margin business, you got a long road to go, a lot of wood to chop.
Yeah.
The third is talent. The biggest challenge founders have is when founders to get a business to $10-15 million. You gotta almost be manic, right? You're spending your own money. You're spending nickels like manhole covers. You make every decision because it's you're on the line. Once you start to scale, you need to have the ability to bring in been there, done that talent, and be able to manage that talent. And that is a challenge. That's a challenge because people that have been successful, that have been in bigger businesses, that come to smaller businesses. There's a different business management model, right? So I think that's the other. Most of the time we run into situations, it's a good idea. There's line of sight on gross margin, but the people equation is not right. And it's fascinating once we get the right CEO in place. The folks, across our businesses, when you get that right, it's really almost overnight. You get, you start making the kind of progress and traction you need to get to scale the business.
Yeah. Can you talk a little bit about Kodiak? I know this is a story that you're really proud of personally. And how that went in the early days and kind of Steve Hoffman was just mentioning earlier before we got on that there's a How I Built This out there on NPR about Kodiak. It is a fascinating story, Steve, and you were early on, you saw some potential there. What was that journey like with Kodiak?
Well, I mean, Joe Clark this is really, I think, probably my favorite business experience. You know, I get a call from my partner, Jamie Mangs at Trilantic, and he knows somebody who knows Joe Clark, and Joel's getting ready to take in capital. Will you meet him? Right. So I go on the internet, and they've got the hokiest video of a trailer, which is their office, and a bear breaking into it. Right. It's just, I'm going, okay, I'm doing Jamie a favor. Okay, I'm that kind of guy. So Joel comes out, and back then we didn't have the office. He came out to the house, and the second page of his deck, I go, he's been doing this for 20 years. He's at $15 million. He's at Costco and Target.
Mm-hmm.
The second page of his deck, I go, holy smokes, Joel, this is $1 billion brand. He goes, what are you talking about? I said, Joe, you have got 20 share of pancake mix business at Target, and the category is up 20%. The category nationally is up 2%. So you're bringing millennial moms with money to Target to buy pancake mixes. You just happen to start in pancakes, right? And so I got two guys I've worked with forever, Bill Atchison and Bill Hooper, who I always say they do all the work and I take all the credit. So we partnered up with Joel, and it was fascinating. It was just a great collaboration. I mean, Joel's got such great business and brand instincts. And we came up with what we call the Kodiak Cabin. You know, his point of difference was a whole wheat, high protein alternative to white refined flour, which meant he could play in any category. White refined flour is it. So we came up with the Kodiak Cabin. Foundation was pancakes mixes in 25,000 doors. First floor was baking mixes in 25,000 doors. Second floor was all that in a cup you can microwave in a minute. Then the third floor was frozen waffles. And Joel, you know, I mean, those guys, the board meeting, we go to these board meetings, and I always go in these board meetings for like three things that, you know, I was going to bring up to be really the informed and helpful board member. Joel already done it. I mean, this guy, his business IQ is off the charts. So he went from $20 million to when we sold part of the majority of the control to Catterton 18 months ago, he was at $200 million, and talked to him recently, he's at $350 million.
Wow.
So he is going to get to
even before you got involved, Steve, with Kodiak. I mean, his journey was up and down. It's amazing that he survived to get to you. There is a great episode on How I Built This to kind of give his almost that whole story before he met up with you.
Well, 2 years before he met us, he was on Shark Tank. He and Cam, his partner, were on Shark Tank. And they were offered, they were told all the reasons why they weren't going to be successful because General Mills and everything else. So I think they offered him $500,000 for half his company. And he said no, wisely.
He didn't take it.
It's just a great. It's business. I'm kind of a brand junkie and a trend junkie, and I've been on some of the great rides in this industry. I was on Healthy Choice, turning around Trop. Working with Joel on this one was so special because it was so personal. It was his family's business. All his family had equity in the business. And, he got to an extraordinary outcome. And, to have a small part in helping him do that, is a great, is just, I guess I said, probably my favorite business experience.
Now, you've also spoken to this new company you've merged in just conversation here, but this is new news, this company called Grass Fed Foods, right? So tell us a little bit about that.
Yeah, we invested in Teton, which was hot dogs and dinner sausages 6 years ago. And
grass fed, right?
Grass fed, grass fed. They were sourcing most of their raw material out of Tasmania, which is the ideal place in the world to get grass fed. And we built that business, and Mike Murray did a terrific job. Got it to $60 million. Was making money, but there was nobody to scale in the grass fed space. And my partner Vince, kept knocking on doors saying, if we get two of these companies together, we could kind of clear the field and be the largest. And we met Chris and Matt from SunFed. I met them like 5 years ago at Expo. And SunFed is they're 6th generation ranchers from Northern California. And so they do fresh meat, what goes in the butcher case, what goes on the table at the restaurant. And they had gotten to $60-70 million. And they're all fresh meat domestically sourced. So we had these two beautifully complementary companies. One doing prepared with an international source, one doing fresh with a domestic source. And the big challenge was, this was going to require somebody who really knew what they're doing to put these two together. And we brought in Jeff Tripacan, who had spent 15 years in premium protein with Nyman and Coleman and successful exits on both. And we were able to attract him. And so now we've got this $120 million business with a guy who's got I've been there, done that guy with a playbook. And I literally go to board meetings now, and I think my IQ drops 10 points every board meeting. I mean, this guy knows more about the meat industry than, so I think this is going to be this could be the biggest outcome in Sunrise. I mean, this is really going to be a rocket ship. And it's one that, we worked long and hard to figure out the model and get the right executive. And now he's putting together the team that, knows how he wants to do things. So I think it's going to be pretty successful. I think also our Maple Hill business. I mean, that's the only pure play in grass fed. I mean, Horizon's got an offering, Organic Valley's got an offering. Peter Burns is running that business with Jim Hahn, and it's we're getting that point of scale where we're seeing light at the end of the tunnel, and it is that brand. I mean, we put it on the shelf in Whole Foods, and in 90 days we went $600 store. So the consumer clearly is looking for it. Yeah. And we were smaller, later term investors in Vital Farms, but really exciting to see what's happening with that business. I mean, it's one of those that came out in the class of 2020 IPOs that traded way up, but is now normalized back to a pretty good place. I mean, I think it's $15 a share of stock, and I think they've got nothing but white space in front of them.
Cool. Steve, I know.
Steve, I must be I must be in the minority. I'm a big fan of Maple Hill, but you guys bring back the maple flavor.
Oh,
there we go. Yeah, and we did a pretty hard pivot to milk. We got some of these other products in there, but Tim Joseph has been what a great founder. I mean, he's one of those visionaries that you talk about Joel Clark's near-death experiences. I'm building that business. Tim Joseph has weathered the storm, and it's great to now see. And we just got a $20 million grant from the USDA to help further promote regenerative agriculture. All of which
that's excellent news.
Yeah.
Yeah. So Steve, I want to go to a different place here with the last 5 minutes or so we have, and that is just talk a little bit about the future. You kind of alluded to private equity drying up a little bit, brands kind of hunkering down on when they're large scale and getting profitable when they're smaller. What's sort of on the horizon for you personally? I know you've got Sunrise 1 and 2 going on. What kind of work is exciting for you right now? What are you looking to do? And, is there a book in you?
Well, you never know that. I mean, I really have enjoyed, I've had 45 years in this industry, and I've been very, very fortunate to the people I've worked with, the brands that I've worked on, the brands that I've helped create. I mean, it's been pretty special. Brought Peter Burns in to kind of run Sunrise 2. I'm here to help him as he wants it and needs it. But I love looking for the next new thing. I mean, I'm a big believer that Back to the Future is going to be a real trend for the next 20 years, whether it's heirloom grains, right? We're working with one company, not working with them, but I've been talking and advising one company, not advising them. I've had 4 or 5 phone conversations. The Bills are very involved with One Mighty Mill. This is fascinating. I mean, I never really knew all the milling in this country is pretty much done by 3 mills. And the reason you have to have enriched flour is because when they mill it, they destroy the wheat germ and all the nutrients in it. So this company has come up with are doing stone ground milling the old way, and it's got short shelf life. So you can't have one giant mill. You got to have mills that are close to the bakery and close to the grain, and they have just gotten started, but like they're in the Northeast they're in the Northeast in Whole Foods, and they're outselling Dave's Killer Bagels by 50-75%. So the consumer gets it, right? It's just that it's an untapped consumer need. So I think things that kind of get back to the basics, that kind of revert us back. So that's personally, I love the kind of stuff I like to be involved in, helping people like that figure out, because one of the big challenges companies have, really is almost company. I'll talk to a founder and they'll tell me their unique point of difference on the telephone. And I'll say, well, send me your package. Get the package, and I go, this doesn't tell me that story.
Uh-huh.
And one of the things we learned at Sunrise, over the years, but particularly in Sunrise, is, you have your story, your concept statement, and you go out to consumers and you test that, and you want that to be 40-50% top box, resonating with your target consumer. Well, you want to make sure your package reflects that concept statement. And we find, like, we did work in Sunrise where we had a major disconnect, and getting those in the right place, because reality is, for these small emerging companies, 99.9% of their marketing budgets are package. And so that's kind of work I like to, I'm talking to a couple of local companies in Boulder who are saying, well, you might have a little disconnect there, and boy, if you have got a disconnect there, you're just spinning your wheels.
Yeah.
You might personally know what your point of difference is, but if it's not self-evident in a nanosecond at the shelf, you're gonna be nailed to the shelf.
Yeah. Every time you show up in public, Steve, people try to track you down. What's the best way to reach you after this call today? I know they're going to reach out to Steve and I for contact information, but what's your...
Yeah, Steve at Sunrise Future Partners.
Okay.
that
Steve at Sunrise Future Partners. Strategic.
Yeah.
Got it.
Okay, good. I'm gonna be quiet for a minute. We're gonna go through our wrap up here. I'll just leave some closing comments. Steve, it's great to have you, Steve Hughes, on the show. And I know that we could have gone on for an hour, but it's the show's designed to be quick hit, 30 minutes, have a cup of coffee, learn something, move on with your day. So thanks for joining us from Aspen, Colorado today, where it's snowing like crazy. And I'm sure we'll see you when you get back into Boulder. But for me, thanks for being here today. I'll turn it over to Steve Hughes. Maybe you can do a couple of closing comments, and then we'll let Steve wrap up the show. How's that sound?
Good. So back to me?
Yeah, go back to you for some closing thoughts.
Yeah, I just think it's this is the most dynamic. This industry is so dynamic, and while it's going to go through different peaks and cycles, I think it's just fascinating to see how many brilliant people and caring people are in this industry. I always said that Boulder was the Silicon Valley of food, and it's got a heart. And that's whether it's me or anybody like me. I think a young founder can reach out to anybody in this town and get a cup of coffee, because I think that's something we need to continue to nurture and build on, because there are tougher days ahead, and it's going to be more about making sure your total business model is buttoned up. And I think Sunrise and his team are perfectly positioned to be at the top of that list. But before you get to that point, I think they're, I kind of want to be in a position to help people out. I've gotten a lot of great things out of this industry, a lot of great friends, a lot of great experiences. I've done well. It's been great for my family, and I want to give back a little bit, and not necessarily with a price tag to it, right? Just help out where I can.
Great, thank you.
Steve Hughes and Bill Capsalis, thank you so much. It's been a really wonderful conversation. Some kind of closing thoughts that I get out of this is, well, certainly investment money is gasoline. It's the fuel that drives the car. But we are switching toward electric. So it's not the only source of capital out there. There is other capital. It's like you're saying, find communities where you can call mentors for a cup of coffee. That's capital. I really liked your thought about the mini merger, where smaller companies who it's too expensive and there's not a whole lot of investor activity right now. So, there's a drought out there in terms of investor funding capital. So what can small companies do to cut costs, build margin, get profitable, and maybe combine with other like-minded brands? So I like to call it co-opetition versus just competition. So that may be a way for smaller companies to survive. I think bigger brands finding really good strategic partners like your firm is important, because I would even think maybe bigger brands right now, if they don't need the investment, maybe now's not the time to go after it. Steve, you may have more thoughts on that. And then just because I'm an advocate and the editor of one of the trade magazines in the hemp industry, we're also experiencing that dearth of investment in hemp. But one of the things I want to bring your attention to, Steve, we ought to get you down to the NOCO Hemp Expo in Colorado Springs in March. But when you talk about alternative grains and ancient grains, whereas CBD is right now under regulatory uncertainty, where we see a lot of potential is in hemp seed for grain, for food, for animals and humans, and also fiber for building, clothing, everything else. So to get your interest and others like you in the hemp industry, I think it's all a part of, right now, this natural, sustainable, healthy living space. And we do need to continue to invest in this model, because this is truly the regenerative, more sustainable economic model. I think it's like you said earlier, back to the future. So I'll leave that as a bit of my wrap up in all of this. Guys, if you want to do another quick round of thoughts, I'd be pleased. I know we've gone over a few, but the conversation's just gone like this today.
Yeah, Steve, I'll jump in here. A couple of comments in the Q&A. Jeff Krinsky says, back to basics, love it. VC has led the industry. Steve is a good man. Kyle Barnhouse, thanks, Steve, Stephen, and Bill for sharing your insights. So some love out there. And Bill Atchison's on the call, by the way. You mentioned him earlier, so he's down there.
Yeah, and Kyle's one of those guys who's doing some new stuff.
Yeah,
he's working with internet AI platforms and how they can serve manufacturers to cut down their distributor bills.
absolutely. Yeah,
that's really, really interesting.
Yep.
Okay.
Okay.
All right, guys, thank you so much for today. Everybody out there, thank you so much for tuning in. You'll find this and all our episodes on YouTube. Just search Compass Natural on YouTube in quotes. You'll find us and you'll find all our episodes. Steve Hughes, thank you so much. And when you're down in Boulder, Bill Capsalis and I both look forward to seeing you. And it's been a real pleasure today. Y'all have a great 2023. We'll see you out there. All right. So long now.